of the time. And my colleague, Sarah Bowling-Mancini, actually testified on this very issue. And so I would recommend you look at her testimony. She's absolutely the expert on this for recommendations on what you can do.
Thank you. Thanks, Mr. Chair.
Thank you, Mr. Chairman. We're fortunate to have a growing number of innovation and just different ideas coming into the financial sector as we look to find new ways to make sure that we are serving existing clients, that they're doing that, and then also how do we reach individuals and families and communities that haven't always had traditional access to different things in the financial market. So I've been glad to see that innovation begin to occur. However, we know that bad actors are exploiting our financial industry only to continue to adapt to the new innovation that we're having and finding ways to undermine consumers, and ultimately fraudsters are targeting these individuals. They're targeting vulnerable Americans with phone, internet scams to the tune of almost $9 billion a year. And in Alabama in 2022, we were actually defrauded, Alabamians, by nearly $55 million. And so that number is not only alarming, but even worse, it continues to rise. And so we must do more to protect consumers. And while thinking carefully about regulatory changes that would impact the benefits provided by banks or P2P apps that provide fast and non-fee payments between friends, we've got to look at what the end result is, what is happening, and figure out how we being Congress, industry, government agencies like the CFPB, can actually get to the root of the problem. And the CFPB still, they're supposed to be the agency that focuses on protecting consumers, but time and time again, it seems that they are utilizing their resources, their time, and their energy to pursue regulations that actually only perpetuate the problem. For instance, I'm concerned that the Bureau's expected changes to the Fair Credit Reporting Act could directly stifle banks' fraud prevention efforts. Mr. Benda, you mentioned this specifically in your written testimony, that the CFPB's proposal could create new legal, practical, and procedural difficulties for banks to detect and prevent fraud and crime. Can you elaborate a little bit more on that for me?
Thank you for the question, Senator. The concern here is that banks routinely access this information, and they use that information for fraud purposes. Mm-hmm. I think the CFPB is targeting others that might use it for commercial purposes, but when you put the Fair Credit Reporting Act around that information, access to that type of information, it creates a whole series of barriers that require notifications to the potential criminals that banks are taking certain action on their accounts. And so for normal Americans, it doesn't make any sense. Why I wouldn't mind being notified, but when banks have these requirements placed on them by FCRA for this type of anti-fraud information, it creates notifications to the criminals and reduces the ability, frankly, for them to share that type of information or use that type of information.
So what would be a better path forward on this, do you think?
I think it's a complex issue. We'd be happy to get back to you with any details on that, but we'd love to work with you on that.
Absolutely. Well, it just seems that financial regulators tend to be less focused on actually stopping the fraud and more determined just to see the institution itself pay for it. And this approach, I believe, is not only misguided, but I think it fuels criminal activity. The solution to preventing financial fraud is not to create additional hurdles for banks and law enforcement or to halt innovation completely through excessive and burdensome red tape. Rather, we have to continue to adapt ourselves. I think that this includes increasing consumer education efforts across the board. This is one of the most important undertakings I think that we could do to help get fraudsters out of the way and allow Americans to preserve their savings and small business accounts, among so many other things. So greater security and anti-fraud mechanisms don't help, though, if consumers can be convinced to willingly hand over their money and their login credentials to a fraudster. So just in follow-up on that, what are banks currently doing to educate, Mr. Benda, their customers about fraud and help them to prevent this, keep them from falling victim to what we're seeing occur across the country?
The biggest effort we have is our Banks Never Ask That campaign. I was interested in Senator Menendez's comments about non-English speakers. We recently launched that campaign in Spanish. So we recognize we need to reach all types of consumers to educate them so they don't, banks will never ask for your password PIN, ask you to send money to yourself. We also have an ABA foundation that looks at elder scam awareness. We create training courses for our bankers so they can help their customers. And we're interested in partnering with the government and other public sectors to try and amplify these messages. We worked with other associations like the AARP, but we haven't seen as much engagement as we'd like to see from maybe some of the regulators.
Well, I hope that those people step up to the plate so that we can help prevent the fraud and protect our consumers across the country. Thank you.
Senator Britt, thank you. Senator Warner from Virginia is recognized.
Thank you, Mr. Chairman. Thank you for holding this hearing. And